All right, so let's see. Okay, perfect. So one of the most difficult things to determine when you begin trading, especially as a beginner, is what type of trader you want to be. The next one is, even when you determine what type of trader you want to be, which being that we have the scalper, day trader, and swing trader, sometimes even position trader. But for position trading, you barely get any retail trader doing position trading, right? So for the most part, we get retail traders literally being either a day trader, swing trader, or even a scalper, right? So the first thing that you face a lot of beginners thinking about is, what type of trader should I even be in? That is, if they even have the idea that they need to prioritize what type of trader they need to be. The next important thing that is so difficult for a beginner to determine is what time frame is best for what type of trader you want to be, right? So when we come to scalping, you need to know what time frame would best suit that scalping trader you want to be. The same with day trading and the same with swing trading. But in this video, I'm going to tell you about the best time frame that is going to suit your day trading, right? And I truly believe that at the end of this video, you're going to truly understand why I've chosen this time frame as the best time frame for day trading. So without wasting my time, let's get right into the video. Shh. What is up, guys? It's KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. I'm back again with another important video for you guys. In today's video is termed the best time frame for day trading, right? So you guys know that I've been actually swing trading for a long time now. If you've been in my trading community for a long time, you know me to be a swing trader, which is like catching that huge pip movement, 200, 500 pip movement. It comes to me extremely easy because I've been doing it for a long time and I have the time frame necessary for doing that as well. But one thing that only a few people know, that's only the people that have been following me for a long time also know as well, is that I can scalp, I can day trade, and I can swing trade as well. That's actually because I actually started learning to trade from being a scalper, literally playing around the 5 minute, 1 minute, 2 minute time frame, and then eventually evolving myself into a day trader, playing around the 15, 30 minute and so on, and then finally becoming a swing trader, which also has a real reason behind it. And perhaps I'm going to shoot a new video to explain exactly why I chose to become a full-time swing trader. Nonetheless, in today's video, I'm going to share with you my experience when I was a day trader, and then the best time frame that suited that, and at the same time why I am considering perhaps even coming back to day trade, and then the best time frame that I'll be going back to revisit when I become a day trader as well. So perhaps after this video, which I recommend you watching to the end, because if you don't watch it to the end, you're barely going to understand exactly why I am choosing this time frame as the best time frame for day trader. So stick around solely, pick your notes, and then jot everything that I'm going to put down, and then by the end of this video I can guarantee and then promise you that you're going to really be blessed and you're going to understand exactly why you should use this time frame as well as the best time frame to be a day trader. So if you've been following this chart for a long time, then I'm not going to waste so much time. Let's go right into the chart and I'll show you exactly what time frame is the best for day trading. Yeah guys, welcome back to the chart. So I promise you that I'm going to show you exactly what time frame is best for day trading. You guys know that I've been showing you so many things around the market, literally depicting my strategy, concept that I use in trading, Fibonacci, support and resistance, demand zone, supply zone, trend line. I've showed you, in fact, so many confluences. But what most people have failed to realize is that these confluences that I teach you, they can be applied in any time frame. Whether you're using the 1 minute, you're using the 5 minute, 10 minute, it does not matter. But for us to be able to achieve the maximum result of what we want, then there are certain time frame that suits so much better to be watching our perspective from than just being all over the place, flipping from one time frame to another, right? So with me, from experience sake, I can share with you that it is insanely better for a trader to be able to master a particular time frame, even though they are at free will to be able to trade any time frame at all. So without wasting my time, I'm just going to really recap so many of the concepts that I've explained to you in my previous videos. So if you've not watched most of my previous video, then I really recommend that you binge watch so much of them, because there are so many values that you're going to get at the end of the day, right? So yeah guys, let's come back into the chart. All I want to share with you is that when it comes to looking at the market, then you really want to look at it from a time range perspective, right? So when I say time range, you guys know how I look at the market on the weekly basis when I'm using my 4 hour. Now the best time frame that you want to really get used to when it comes to day trading is the 1 hour time frame. The hourly time frame depicts so much beautiful patterns and sequence that can really open your mind to activities that are happening in the day perfectly, right? So I'm going to explain that. Now if you look at my chart, you can see that I have so many vertical lines also crossing my chart, which is similar to what I usually have for the ones that I have on the 4 hour. But for the 4 hour, I kind of explain to you guys that with a 4 hour perspective, if I look at one range from, let's say, one line here all the way to the next one here, then it kind of constitute what is happening in the market on a weekly basis, right? Let's change the color. So if we have, let's say, another one from here to here, on the 4 hour, I can explain to you guys, it depicts what is happening on the market on a weekly basis, right? But what we have here is the 1 hour time frame, as you can see from above. So it definitely or certainly couldn't have meant the same thing as well. But the interesting thing is that what it means to have these vertical lines on the 1 hour time frame is that every activity that you see from this range here is what happened in the whole day. So this activity right here is what happened today. This was what happened yesterday. This was what happened 2 days ago. Was it 3 days ago? This was what happened 4 days ago, and so on and so forth, right? So basically, with that vertical lines that I have there, it helps me to be able to understand exactly what is happening in the market or what happened in the market day by day, right? So at that point alone, it becomes clearer our perspective to the market. The only thing is that now we need to add other confluences or other subject matters that we have studied along the line to be able to determine exactly how we're going to be trading this market from a day-to-day basis, right? Now that we have that out of the way, which is knowing exactly what best time frame suits us, and then how to be able to have the perspective of what is happening on the market on a day-to-day basis. In fact, I'm actually going to show you how I get the vertical lines at the end of this video, so you really have to watch the video to the end before you're going to get that source. So the next thing that we come back to is remembering exactly the concept that we used to trade. Remember that as a sniper trader, which I've always been preaching to you guys, you don't really jump into the market, you wait for the market to come back to you, right? So we have our points of interest, our key ranges, our key marked out zone that we wait for the market to come back to us, and then we trade the market according to them. It could be our support levels, it could be our resistance level, demand or supply zones, it could be our Fibonacci zone, or it could even perhaps be our third touch of the trend line, right? I hope you guys haven't really forgotten about that. If you don't have an idea about that, then watch a lot of my videos down there. I'm sure you're going to catch up with the lessons. Now that we have that out of the way, let's go right into the chart and see if you can be able to identify some of these concepts that I've listed out to you, and then be able to trade them accordingly based on the 1 hour time frame, right? So yeah, I'm going to quickly scan through some of these pairs using exactly today as a reference to be able to find trade setup. Remember that if we run or trade anything to do with the dollar, then we like to look at the DXY, right? So you want to look at the dollar index, and it kind of tells us exactly what is happening on the market. Remember that the last time we checked the XY on Instagram live, then we're just about having the FOMC meeting. So if you're not really following me on Instagram, this is where you really want to pause on this video and follow me at KOJOFOREX, right? So I kind of really went on Instagram live with traders and broke down exactly what to expect when the dollar index was trading around this region, right? So I exactly broke down exactly the expectation when the news outcome come, either positive or negative, and the influence or the effect is going to have on the dollar index. And then we saw it play out exactly like that. So it's going to be beneficial to you if you follow me on Instagram, so that you can be able to learn from these lessons. And so now currently we have the dollar index breaking that high of the range and then continuing all the way up to this point, and then it created this high here, dropped down, and then traded its way gradually onto this line again. Now trading onto this line around this range, then it's going to give us like sort of, you know, that market coming back into a resistance rate, acting as if it's currently breaking out of the range. It can easily deceive anybody to think we just broke out of this range and this market could actually, you know, continue all the way up, which is very easy for you to think, right? Nonetheless, if you have the patience, and then if you understand candlestick formations, which I recommend you joining any of my sessions if you're in Ghana to find out, or perhaps purchasing the good strategy to find out my exact candlestick confirmations, then you're going to have the patience and know that you're not supposed to fall for this trap here, right? So I click forward, and you're going to see that there's this huge big drop, which can then be leading you to believe that indeed the bears are present around this region and there's potential for this market to drop. The moment you start thinking around the fact that there's potential for this market to drop here, that means that concurrently you should be looking at the dollar being weak, right? Or the dollar just losing its strength, because the dollar index represents the strength or weakness of the dollar depending on the position it is going. If it's going bullish, the dollar is strong, and if it's going bearish, the dollar is weak. So the moment I start sensing that, okay, dollar index is pointing out some bearish movement, and then there could be some weakness around here, which is eventually going to lead the dollar dropping, then it means that I have to look at my USD crosses and find opposite trades in that same light. I've kind of broken this down in my previous video, so if you don't really know about that, that means that you're not been really watching my video to the end, right? So like obviously monitoring this and then seeing exactly how it plays out, then I kind of get the idea already that the dollar index is going to perhaps be weakening, and then we could find some weakness all across. But so clearly you can see here that what the dollar index just lost its massive strength, and then, you know, it means that cross reference wise, if you're watching any other dollar cross, then you're going to be seeing the market acting in the opposite direction, except for the fact that it has a direct correlation with the XY. So in talking about having direct correlation with the XY, then we know that the very currency pair that we have to watch is USD CHF. And if we click straightforward to USD CHF and see exactly what happened, you guys can clearly see that for USD Swiss franc, it also created the same double top scenario, which is this market hitting this high, dropped and trading its way all the way back up here, and then from there literally dropping. Now the catch here is not just to fantasize about the drop, but the catch here is to think about how we could have got an intraday trade using the 1 hour time frame. Now if I mark this zone here, you guys know how I mark my zone and tell you that as far as we are looking at this range being a resistance range, then we don't want to see any candle closing above the range. And then since we did not identify any candle closing above the range, you can clearly see that what this market closed with this huge impulsive bearish move, which could be a very discouraging candle for us to jump in on this trade. That's if I use this play button just around here, right? So you can see that here you may not necessarily be encouraged to jump. You're thinking that okay, this market just literally left me with this huge candle, so I might as well not even jumping on this trade as well. But the moment you go forward, you're going to see that what we have this huge pullback on this candle, right, which can be an interesting region to just come back into the market, because at this point it kind of lowers your risk potential in the market, if you understand what I mean, right? So here you realize that what you're not going to be risking as much as you would if you took the entry right here. Now the market has given you the opportunity to come back all the way a little bit up here like that within these regions here, and then your risk potential is just about 30 pips there. About it is not so much. It's not really going to hurt your account as much, right? So here you have a second reason to jump in on the market, even if this huge one here discouraged you from jumping in, and then holding on onto this trade, knowing that because you're intraday trading, this market is supposed to go into the direction you're expecting for the rest of the day, right? Because anything that is happening here is on a daily basis, anything that is happening here is on a daily basis, and anything that is also happening here is on a daily basis. Then I don't really expect you to do much in the day after you find your entry, rather than just holding on to the trade and letting the market do its own magic, and then you're going to get a result like this after you have the patience to actually hold on onto the market, which is a very beautiful, sumptuous, whatever it is, trade, right? Similar thing can also be observed when we look at USD card, right? So if you look at USD card, you can clearly see that it also created this high here, and then this market traded back into the highs here, tapping here, creating this perfect candlestick formation here. So this could be your entry regions, and then you're going to have to hold on to this trade for the rest of the day and then bank out some sumptuous juicy pips as well. When we look at Euro JPY, it kind of shows a different concept or different confluence. You're thinking, okay, this region here, it does not really give us any level of a support, neither does it give us any resistance. Perhaps it couldn't have even given us resistance in the first place. So how are we then going to be able to find trade entry around this range and be able to hold this trade all the way there? Unless of course you've not really watched my Fibonacci video, then you'll be lost in this process, because if we really plot our intraday Fibonacci range from this low swing here all the way onto this high swing here, and then extend our Fib range, then we can see that what along the line this market was just consolidating within this range, but eventually dropped and tapped perfectly onto this 61.8 retracement region and used it as a perfect bounce off with a perfect candlestick confirmation here to just jump and then continue in that bullish move. So this is a very beautiful intraday setup that you can use a concept like this to be able to catch a trade setup on. And then lastly in this series, I'm going to show you what you could have done with Euro USD as well. So Euro USD has an inverse correlation with the DXY, right? So if you remember what I said, that USD Swiss franc has a direct correlation. So the moment you see the XY dropping, then indirectly you kind of see USD Swiss franc also dropping. But the interesting thing is that as far as you're seeing these two dropping, then the opposite thing that is happening with Euro USD is that it's actually going to be gaining strength. Why? Because we have USD as the code currency in Euro USD. So at the end of the day, you kind of expect that what with Euro USD having traded up above this region and trading close back into this lows here, creating this double bottom scenario with dollar index also pointing weakness in the dollar, then it also kind of makes easy sense to be able to catch a buy trade on this and hold it for the rest of the day, and then you would have caught a very sumptuous entry around here with a very low risk potential, which is just barely about 20 or 30 pips, and then enjoy huge upside potential of a pips, and then enjoy money in the market as well. So I didn't really intend to make this video long, but nonetheless it became long anyway. So if you really did enjoy this video, which I suppose you did, then smash the like button, subscribe to this channel if you haven't done already, and remember to follow me on all social media at KOJOFOREX. Click in the link in the description to join the KOJOFOREX Telegram community, and also call the numbers below if you really are in Ghana or any part of the sub-region and you want to join my KOJOFOREX sniper session, which is happening in the KOJOFOREX Academy located in West Legon. West Legon is a suburb of Accra, right in the middle of the city. So without wasting any much time, I hope you guys really did enjoy this video. I'm going to bring you a lot more videos, interesting concepts like this in the near future. I'll see you guys in the next one. Peace.